Hello, everyone, and welcome to the Asset Ambitions podcast. Today, I'm joined by Alaeddine Jabri. He is a financial planner, a certified chartered life underwriter, and a managing partner at Longevity Achieved. Join us to talk about financial strategies and building wealth. So, thank you for coming on, Al.
You're most welcome. Thanks for having me.
Yeah, this is amazing. So I wanted to start a bit more so, I guess, on your personal journey and kind of upbringing, and what brought you to, kind of launching the Longevity Achieved. I know that I think that you are partners, right?
Yes.
Yeah, yeah. So
Yes,
if
we
you
have.
can build upon how that came about.
Yeah, we got. How far back do you want me to go?
Well, I guess your upbringing, maybe school. Firstly, how do you achieve, those certifications,
Yeah.
perhaps?
Yeah, yeah.
Yeah.
Okay, good. Well, we'll go back a bit. So I grew up in an entrepreneurial family, and so it was great to see around me. I learned my dad would do actually liquidations and auctions. So if somebody was going out of business, he'd go in and he'd buy whatever they were doing in bulk and resell it, right? So
Okay.
I just grew up in trade and
That's
in
interesting.
business. Yeah. And so I caught that entrepreneurial bug. And so going through, I think since 16, that was my last job. I worked as a server, and that was it. After that, I was self-employed the whole way. Yeah. So how we got into finance is I have a partner. My partner's name is Ashley. She's also my life partner, my wife. So she started the firm 12 years ago.
Oh,
Right?
wow. Okay.
Yeah. And before that, I was in high volume catering. So we had clients like Amazon and RBC. And basically, if you needed to serve 1,000 people within an hour, you'd call us. Okay. So if you got like a big staff and you're having an appreciation or a day, they'd call us. So that's what I did. But that was a grind, man. And
It must have been.
Absolutely,
I can imagine.
at our peak, we'd have 90 staff in a single day, 15 locations running simultaneously. So you can just imagine all of that. But we'll get into the wealth side of things in a second. But if you think about scaling and leverage and all of the things that we talk about in building wealth, it didn't exist in that business, right? That business was hard work. Lots of limitations, lots of ceilings around us, and the writing was on the wall for me. We did well, but then Ashley said, it's time to change. So she was in the insurance business and said, come into the firm and do what you did over there, here, help us scale it up, and that's what I did, and that's
Yeah.
how we got here.
So were you kind of the spokesperson for that previous business? Because you're very well spoken.
Yeah, thanks. Hey, just practice, just practice.
That's
I was on Dragons Den for that business.
really
Yeah,
okay. Wow,
yeah,
that's interesting.
yeah, yeah.
And so was that Toronto based
That
as
was
well?
Toronto based.
Yeah.
Yeah.
Okay. And Longevity Achieved is also Toronto
Is
based.
also Toronto based.
That's
Yeah.
it.
In fact, Longevity Achieved operates across Canada except for Quebec. So we're licensed nationally.
That's it. Exactly. You're still able to give your services,
Everywhere.
nationwide, but it's located. I guess the headquarters is in Toronto.
That's right. You got
Okay.
it.
Okay. Yeah, that's nice. And well, it's similar. I got a similar upbringing actually. I mean, my parents were owners of a hotel in Hearst. It's a small town down up north,
Yeah.
but it also gave me that entrepreneurial, inch there. I needed that push, and that's where I got it from, and it was amazing. So I'm really glad of that upbringing,
Yeah.
and I guess that also helped you a lot. So if you can expand about the start of Longevity Achieved and how that went. So I guess your wife had started
Yeah.
previously, and then you kind of joined up and propped it up, I guess.
Yeah, so there's a lot. Finance has a lot of different avenues and quarters, right? So you could be in wealth management, you could be in risk mitigation, you could be in the legal side of things, on estate. Like there's so many different tentacles for wealth and financial advisory. And so she was focused in the insurance side of things, and that's great. But it's only one arm. And I thought, we could bring some of this hospitality to financial services. And what that means is just really a catered experience. Okay, so yeah, again, that history, that experience coming into financial services now. I'm a real front of house guy. I want to engage with people. I want to have them feeling good. I want them to feel like they're going through a tour whenever they're working with us. Okay, and so
Yes.
we brought that to finance, and you can't sell one product. You can't have one offering. It's got to be way more. So we immediately, as soon as I came in, it was like, okay, well, so we've got the insurance done well. What's next? Well, we got to expand the wealth offering. Okay, after we expand the wealth offering, we help people make more money. Now what do we got to do? We got to help them keep it. So we got to expand into accounting and tax advisory. And then, there's all
All
of
these
these steps.
branches kind of started growing there.
That's exactly what it is. And that's how we came upon this model of a full service financial advisory firm.
Yeah, yeah, and I can attest to that. I mean, I'm a client of yours, and I've been liking the process quite a lot. And that's it. You're able to get a very targeted service, and you're well versed. You worked with many different, I guess, paths. I'm a realtor myself, and you got specified recommendations for realtors.
Yeah.
But I'm sure you got them for all the other professions that you have out there.
Yeah, that's the idea. And I'm so glad you had an experience like that, because that's what we're trying to create, this one of one experience. Okay.
Yes.
And we have to be able to do one of one at scale. That's a hard thing to achieve.
So I guess my next question was the core services that you offer. We kind of went over it,
Yeah.
but can you breeze over maybe a couple more that you're dabbling in or foresee that you might go into the future?
Absolutely. Yeah. So we talked about the basics. So insurance, wealth management, tax advisory, estate planning. I think the future is quite interesting, because people are talking about, I mean, we know globalization, being a global citizen, maybe touching base in other countries for tax purposes, for leisure, for lifestyle.
Ah, that's interesting.
We're gonna get into that world. So
Okay.
the first things first, you gotta lock in your cross-border specialties. So we're working with a lot of cross-border specialists for people who want to do business or live in the U.S. and Canada, which a lot of complexity, but we're expanding well beyond that. And it used to be offshore, but now we're talking international, right? So what if you want to go to Portugal and spend your time there, or live in Greece, or go down to Uruguay, right? There's lots of options.
Oh yeah,
Around
your
the world.
horizons are really broadening up then.
Totally. And
Yeah.
so where do you go for advice, right? So YouTube, for sure, you might get some advice and look there. But I think creating a catered solution there as well, to provide advice for people, connecting them with the right experts, because that's multidisciplinary. You need tax, you need accounting, you need strategy, all of it.
Yes.
So that, I think that's the next growth.
And I feel like the name speaks to all as well, right? Longevity achieved, like I kind of know it's finance related.
Yeah.
It speaks to everyone. So your vision of expanding and the horizon expanding, I like it.
Thanks.
I like it.
Sometimes people think we're in the supplement business.
Fair, fair. Yeah, that's true, eh? Hey, maybe that's the next branch.
You got it exactly. Okay,
You never
you're
know.
thinking.
You never know.
Yeah, it's cool.
Okay, so do you have a key moments or a story that really hit you different with a certain client of yours, or
Yeah, I got a lot of great experiences with clients.
I'm sure.
For sure. I'll tell you one. I'll tell you one that sticks out for me. It's a client of one of our advisors. Actually, he's a medical professional. He's actually a specialist doctor, surgeon, and we were on a call once, and he was doing some of the strategic planning that we do. Okay, so after you check all the basic boxes, you got to get a little bit more creative, and you start using insurance as a tax shelter. Maybe you put a family trust in place, and we can talk about whatever you want to talk about. But for this client, we were starting to implement some advanced tax planning, and on the call, I was engaged with him and asking about how he's feeling about everything. Okay, and he just opened up, and on the call started bawling about how difficult it's become for him to fulfill on his oath and his desire to help people, because he feels like he's being taken advantage of. Okay, so he's a high income earner, and now every new dollar he makes, he's spending one less hour with his family, one less day with his family.
That's it.
In order to help this patient or that patient, and he's leaving half of that money to Ottawa.
Yes.
And it's like he was feeling penalized, and it was hurting his ability to actually fulfill on that goal, what he wanted to do. So he's like, I'm questioning, should I continue? Should I do it? And it was like, it really hit me hard, because nobody wants to feel taken advantage of, right? Even in that capacity. So you got to start reassessing. What are we doing to our specialists? What are we doing to our entrepreneurs? Our highest achieving people? What are we doing to incentivize them, or in this case, decentivize them, right? Because that's the worst thing if we start to get great people
I totally agree. Yeah, feeling oppressed like that or
Yeah,
something like that, or taken advantage of was the right words
yeah,
there. Well, specifically speaking, I mean, we're talking about the tax situation, and I want to talk about Canada and its economic landscape,
yeah.
and what we can foresee in the near future or longer future. So I wanted to talk about the current economic trends that we see here in Canada. We
Mm.
just got an interest rate lowering
Yeah,
slightly, 0.25%.
yeah,
And I wanted to talk about inflation
yeah.
as well, if you have something to sprinkle on that topic.
Yeah, well, I can talk about it from a financial planning standpoint or
Yes.
how it impacts your life and your spending, right? Inflation is that silent killer, right? And
Yes.
I'm sure your listeners know, but every time, prices increase, okay, in anything, in all of our consumer goods, anything that we're engaged in, your spending power decreases, right? So if you've got $1,000 sitting in your bank account and you don't make any money on that $1,000, but the cost of goods increase, that $1,000 goes less. It just, you reduce how much you can do with that money.
Yeah.
And that's the effects of inflation. Now, it might not sound like a lot today, 1 or 2%, okay, so I have $20 less spending on that $1,000. But when you compound that over time, my goodness, right? So you're planning today for retirement saying, I want $100,000 per year when I retire. But if you're retiring 30 years from now, you're
That
not,
money won't be worth the same.
no, not at all. That's
No.
exactly it,
Yeah,
right?
yeah.
So that's inflation, and inflation's a risk that we're dealing with, and that's what our governments are dealing with, and the Bank of Canada is dealing with, trying
Yeah.
to manage that.
And like it won't your dollars lose purchasing power, but I guess not all that much maybe against your Netflix subscription and your Domino's pizza and your little consumer things. But if ever you aspire on getting a nice scarce home that is well built and in good order, they're growing disproportionately to the devaluation of the purchasing power of the currency. I mean, the inflation on consumer goods, we see objects, or I guess goods, kind of shrinking to kind of absorb that inflation.
Yeah, yeah, yeah.
But you can't shrink a house to absorb the inflation. So
No,
these prices, they just keep hiking no matter what, almost. And if you aspire to have a house, if you aspire to have any other scarce assets, stocks, and everything like that, it's hard to keep up if you're not already invested into those to
to-
be able to buy one in the future.
totally, totally. That's really astute of you to notice, right? So sometimes inflation isn't just about the price rising, but maybe the what you're buying shrinking, right? For the same
Yes.
cost, right?
Yes.
And you see that in packaging, like at the grassroots level, the bag of chips you used to buy
Yeah.
10 years ago, it was actually
We're starting to
it had
see it
more.
quite a bit. Yeah, yeah. Unfortunately, we're starting to see it quite a bit.
Yeah, yeah, yeah. So that's good.
So on that, I've been looking at some reports and I've seen a few papers actually coming out and exploring the idea that Canada is potentially lagging behind as the weakest G7 economy
Yes.
for the next,
Yeah.
decades ahead
Yeah.
from a few papers that I looked at.
Yeah.
So what are your thoughts on that?
Yeah, yeah. I think it's a big problem for us. We are one of the lowest producing. Like what our economic output per capita per person
Yes.
is one of the lowest of all of the developed countries in the world.
Right.
Yeah. So,
Right.
and there's a lot of different reasons why that might be the case. From my side of the world, our lens of financial advisory and finance, I think we're decentivizing, we're penalizing our entrepreneurs. And so when you look at an entrepreneur that's got a great idea, I literally was meeting with one yesterday whose primary business, 90% of his business is in the US. Okay. Now you got to wonder, he lives in Canada, he's a Canadian, his home is in Canada, his kids are here, they go to school here, this is all of that, but he's doing business in the US.
Oh,
Right?
yeah.
Like, that's pretty
And
wild.
that I've heard that story countless times.
Absolutely.
Like countless times.
Absolutely.
It's just the incentive structure is there just a bit south of us.
Yeah, yeah.
So if you want that incentive structure, you just got to move
And-
a bit closer to the States.
And some of our entrepreneurs here understand, okay, and so we do have in Canada incentives for entrepreneurs. Okay, there's a Canadian entrepreneur incentive, there's a lifetime capital gains exemption, there's lots of things that we do to incentivize entrepreneurs. But you give with one hand and you take with the other, and that creates a problem. And entrepreneurs are just by definition, they're pretty savvy. They're smart. They're on the cutting edge. They're thinking about things. So they're going to analyze all of this. They're not going to get the smoke and mirrors here. So we got to do better to incentivize our entrepreneurs, to take care of them, to promote them, to help them succeed, because that's the backbone of our economy.
Yes,
small business.
most definitely. We don't want to stomp on that ambition either, right? We want to
Exactly.
fuel that. We want to fuel that, and that's the goal of this podcast here. That's actually the goal, is fueling youth entrepreneur spirit, and I'm sure we'll achieve it.
Great.
So how do we find opportunities in those weakest moments, or do you have any ideas on how to contour or find incentives? How would you approach that?
Yeah. You asked that in a unique way. I went one way when you started the question, and then I went another way. So I'm going to answer both, okay? So there's always opportunity. There's always opportunity. And anytime we see a downturn, there's always, okay, one can't exist without the other, okay? So I'll give you a perfect example. Our portfolio manager does some private equity, okay? So we are invested, or there's a fund that's got some junior mining companies in it, okay? The current economic climate, okay, so on this date, so we're mid-September, is not great for mergers and acquisitions in the junior oil sector, okay? Fine. So those companies have dropped in value temporarily, okay? Now, you could say, well, we've lost value there. But our portfolio managers went ahead and invested with a company that aggregates these junior miners, okay? So you've got these companies that need a good climate to be valued, but then on the other side, you can hedge your bet by investing in a company that takes advantage when the mergers and acquisitions market's down, right? So you get what I'm saying? So that's the complete opposite side. Now we're invested in this company that's buying up the ones that have a reduced opportunity. Well, that created an opportunity, right?
Yeah.
You just got to be willing to look for the advantage here, okay? And think outside the box. Or if you don't want to think outside the box, get people around you that are doing that in different areas, different aspects, okay? Does that make sense?
Most definitely, yeah. I think one big thing that I got from business school is keep your options open.
Yeah.
Do not just turn a blind eye to an option. Analyze it. Make sure that it's not made for you, and if you think it isn't, just make sure before, and it might just be the answer.
Yeah.
Yeah.
Very good.
And my answer to this question, I wanted to expand upon it a little bit. If you see a certain country maybe disproportionately kind of devaluing or losing purchasing power, sometimes, historically for thousands of years,
Yes.
sovereignty independent assets have been such a good hedge against that. So for example, that's gold or any other commodity. You don't want to buy corn because there can be much more corn grown each year, but gold is hard to mine and get out of the earth, and that makes it a scarce asset. But today we actually have Bitcoin as well, which is it's self-sovereign. You're not dependent on solely the Canadian government and their view on that tiny asset. It's actually a worldwide asset that anyone can buy, same as for gold, and that's a good way to kind of hedge, just to pepper in my opinion on there as well.
Absolutely, I think you're right, and just our portfolios today have gold exposure in it, right? And that's not a typical thing that we use.
It's been performing well lately.
Absolutely, and when you're playing defense, you want to lock in a little bit of that, right? So the other half of that question, though, when you said incentive, led me to think, and this is the opposite. Okay, we're not talking about sovereignty now; we're talking about going into government, right? When this happens, governments tend to create stimulus packages, right? And grants and things like that. So take advantage. Play the game.
Yeah.
Go online. What's available in my sector, in my industry? What money are they giving away? What are they incentivizing me for to hire staff? We went through. There's a Canada Summer Jobs program, for example, for any entrepreneur. Okay, you go online. They will pay half of the minimum wage. So in this case now it's like $8.50 per hour for if you hire somebody under 35 years old. Okay? All you have to do is create the job description, fill the need, and they'll pay half. So if I can't afford a staff member, well, aside from going and get an AI agent, okay, or hiring offshore, if you want a human being, you got a 50% discount there.
That's
just by applying for the grant.
That's it.
So think about where can I get these kinds of grants that are going to help me stimulate my business.
For sure, for sure. Well, actually, my last guest on the podcast was HVAC company,
Okay.
and they're located here in Ottawa. They
Okay.
started in 2022, and in 2023 and 2024, they were the fastest growing Ottawa-based company. And
Nice.
the reason, well, the main reason that is they stroke a niche, but also there's so many government incentives for HVAC systems right
There you
now. So
go.
they capitalized on that, and they've opened now a headquarters in Halifax, they were telling me.
Yeah.
So they moved provinces as well because there's better incentives over there as well. So they're just capitalizing on that, and I think that's beautiful.
That's entrepreneurship.
Yeah,
That's
that's
what it
it.
looks like.
Exactly, exactly. Take the path that is has the least resistance.
Yeah.
So, talking about building a solid foundation, I wanted to ask you because you're somewhat of a tax expert. Simple tax savings ideas for the average person, average viewer out there.
Okay. How old?
We're talking, early 20s.
Yeah.
I'd say that's mostly my,
Yeah.
mostly my viewership.
And I ask because there's different plays for different ages, different generations,
For sure.
different incomes, things like that. But here's the thing: I'll say to everybody, okay, no matter where you are. Some people are saying, you know, number one thing you got to do is you file your taxes. Okay. Now that might sound too simple, but lots of people aren't doing it. And even for lower income or people that are aspiring to create greater income, there's lots of credits, refundable tax credits that only apply once you file your tax return. So
That's fair.
take advantage, right? Just get the first, check that first box, right? And then after that, for those of you who are real estate investors, make sure that if you're in a two income household, that your ownership structures are right, because sometimes you have a higher earning spouse and a lower earning spouse. It's very not always equal. So make sure you guys are realizing your income under the right spouse. The right spouse is owning the right assets, and that income is attributed in the most tax efficient way. And anytime that you can deduct interest, okay, so that interest deduction, make sure it's deducted on the higher income earning spouse. I just wrapped with a client a few days ago, big income disparagement. Okay, so one's earning a $250,000 and the other one's earning 100. That's
Okay.
significantly different tax
Yes.
brackets, 15-16% different.
So
okay?
interest being kind of a lost or a cost, you want to apply that to the highest earning.
That's right, absolutely.
Party,
So you're going to borrow. So let's assume that you have this line of credit, okay, that you're going to borrow to invest. Well, borrow it through the higher income spouse, okay, and then deduct the interest correctly on the higher income earning spouses.
Yes.
That on a $200,000 loan, that's $10,000 a year potentially, okay, in savings. So you got to think about from that perspective. Simple plays, just little thoughtful notes save you a lot of money along the way.
Yes, totally agree.
Yeah.
Totally agree. No, I mean, most wealthy people, or if not all wealthy people, they rarely spend their actual money
dollars.
that they own. It's almost always just borrowing against assets that they do have that go up in value. So they're able to borrow against them.
Yeah.
And that makes it a very profitable way to live.
Yeah, no doubt.
Yeah. So let's talk about the role of insurance in your business, and what type of services or things that could be of use to the viewer.
Yeah, we'll create two buckets for insurance. Okay?
Sure.
So for bucket number one is insurance for need. Okay. And what I mean by that is you've got a promise that you want to fulfill in your life. Okay. So insurance got to be a stopgap. So what I mean by a promise, let's say that you have a mortgage. Okay. You've promised to pay that mortgage off. Okay. So you buy insurance so that if you die before you pay off that mortgage, the insurance company will pay it off for you. That's insurance for need, okay? Another promise, you have a baby, okay? You've made a promise, whether you said it or not, you've made a promise to get this baby to adulthood, right? Okay, so all the financial needs, you want to get them to school, so you have insurance so that if you pass before, that event happens, you've got the stopgap, and the insurance will make sure your financial situation is there, and you fulfill on that promise. Does that make sense?
Yeah.
Okay. One other place for need is, you're earning an income, right? So you're in a relationship. Your spouse is counting on your income. If you can't work, you got to fulfill on that promise, right? So disability insurance would replace that income. Okay, so that's what I mean insurance for need. Now, the other half is insurance for greed, we'll say, okay? And so that's where you're using insurance as a tax shelter. Now, insurance has very particular laws for us, how it's treated in Canada. So growth inside of an insurance policy grows tax-free, okay? Death benefits that are paid in Canada are paid tax-free, okay? Corporations can own insurance policies and can use corporate pre-personal tax corporate dollars to pay for insurance policies.
Okay.
And those insurance policies create room in a corporate capital dividend account, it's called. And a capital dividend account can let you pay money out of your corporation tax-free, okay?
Really?
So, like, there are so many different levers to use insurance as a tax planning tool or an estate planning tool, okay? So I would urge your listener to think, our audience here, to think of insurance as a vehicle, okay? You build it on a chassis, and you can build, a great, a great, Honda Civic, and you can build, a Porsche, and you can build a Lambo, right? There's a lot of different things you can build on a chassis
Yes.
to suit, right? And so it's very flexible. So that's how we use it: need and greed, and then once we understand what you need to use it for, then we start to build the case on top of a chassis.
That's it. And
Yeah.
you with your services, it's so you ask the right questions to your clients and you kind of pinpoint exactly the type of insurance that might speak to them
Totally.
at their specific needs and the time of their life as well, right?
That's exactly it. And we
Yeah.
start with everything's available, and then through questioning, we can take things off of the plate, and then what we're left with. Have you ever heard the story of David? So like
David and Goliath?
No, Michelangelo, like his, David, the statue of David.
Okay, yes, sir.
So when you ask, so if you ask, I think he was asked, how did he create David? Okay, and he said, I didn't create David. David was already in the marble block. All we did was remove, and we revealed David, who was inside this marble block, right?
That's
So
it.
same idea. Everything's already there for our clients. Everything that they need is there. We just need to chip away at all the stuff that we don't need, and then what we're left with is exactly the future plan for them.
Yeah, that's it. Yeah, that makes total sense.
Yeah.
You can apply that metaphor to life as well.
absolutely, yeah.
It's beautiful what you can bring here on earth. We're here with so many hours when we're born. We have time to bring something beautiful to the world.
Yeah.
Yeah. That's
cool.
amazing. Yeah, I like it. Okay, thanks for going into detail. Now, I wanted to ask you, if we can kind of set a road map of the average person, what would be things to prioritize? And very, very basic, for anyone listening out there, what would be kind of an order of things to do to be tax advantageous and, limit the amount of impact your income has exactly on the taxes, and
Yeah.
how to maximize your profits in the end?
Yeah, I think there's a financial planning pyramid, okay, that we all learn about when we're going through financial planning school, so to speak, right? So you got to start with risk management, risk mitigation. So what does that look like? Well, get your affairs in order. Buy a little bit of life insurance or disability insurance, or buy enough insurance for things that you can't afford to happen, okay? So don't buy insurance on your iPhone if you can afford to rebuy your iPhone, okay?
That's it.
But if you can't afford something, then buy insurance for it. That's job one. Get it all done. Second, lay yourself out in a way that you've got an emergency fund, okay? So get your spending in order and put enough money away so that the world can't rock you. You got to play defense first, okay? So get your insurances in place, get your emergency fund in place, and then get your spending in order. Okay, job number one is to spend less than you earn. Okay, that's my first question with people is, as we're engaging, it's like, do we have a tax problem or do we have a revenue problem
Yes,
right
yes.
now? Okay, or better said, I'm putting it in the positive light. It's not a revenue problem, it's a spending problem, really, right? And sometimes we talk about budgets, and I talk with a lot of my clients will say, look, I don't want to spend less, I'll just go make more. Okay, and I love that. That's a great entrepreneurial mindset. But you got to go do it then. Okay, it's not enough to talk about.
And I find a lot of people, when they start making more, they kind of match their expenses along with it, rather
Totally.
than keep the same expenses, live how they were living, and then you're able to pile to invest instead, and kind of detach your time from the income you'll be earning in the future. It's a sacrifice,
Absolutely.
but definitely a worthwhile sacrifice if you want, time with family, time with friends, time to yourself, time to travel, time to do things that you love rather than work all your life.
Yeah. Yeah, and I empathize with any of the audience out there who, excel in a pressure cooker situation. Like for me, I put myself in tough spots, maybe extend further than I needed to in order to catch up because I'll excel in that
Yes.
environment. Okay, but that catches up to you too. You gotta get to the point where, like you said, yeah, your future self will thank you. Live today thinking about the future self. So if you live today within the means, so to speak, increase that income, tuck it away for the future. There's that saying, easy decisions today make a hard life later. Hard decisions today make an easy life later. Like,
Yes.
it's like that, right?
Yes.
So your future self will thank you. So get your spending right. Once your spending's right, now you're putting money away. Okay. So very simply, even though we have portfolio managers who actively manage, the best thing that you can do is do ETF index investing, low cost for the broad market. Okay. That is the best thing because we believe markets are efficient.
Yeah,
Okay.
it's very stable. You're
Absolutely.
well diversified. There's no headache of needing to do research into specific businesses and
Exactly.
spend your time on that. It's very time consuming. That is.
Absolutely.
Yeah.
And the vast majority of companies and stocks in the markets, fail. They lose money. Okay. So you want to, and, like, I don't know what the actual statistic is. I think it's 50% of all gains came from 20%, 20 companies, 20
Yeah.
companies.
Oh yeah.
So it's
Yeah, yeah,
like,
yeah.
it's pretty wild
If not
how,
more, like at least the U.S. market, like the S&P 500, that's why they call it the
me-
Magnificent Seven, right?
that's
It's
right.
like seven stocks that do, if not 70 or 80%
Yeah.
of the growth and all.
Yeah. So
So
how do you ensure you have them? Well, you buy the market. Okay. So
yes,
and then allow a manager to kind of make it a little bit more optimal for you or better for you by getting things that aren't available to the general public, alternative asset classes, private equity, private debt, things like that. They're available to the consumer now. Once you know you're growing your wealth, now it's time to play a little bit of defense. Okay. You get to the point where you've built enough wealth. You got to know what it's for, right? Sometimes you ask clients, so I want X rate of return. I'm like, why? Why do you want X rate of return? Oh, I want freedom. I was like, okay, but if we can get, well, and then we ask what's freedom for you. Okay,
yeah,
but assuming we have all these answers, like, okay, if we can achieve that goal with Y return, would you be happy with that? He's like, yeah. It's like, okay, so then why would we chase X when we can get it easily with Y,
that's it. Yeah,
right?
yeah,
So
yeah.
we got to know what you're doing it
Let's
for,
not make a hypothetical scenario that's so hard to achieve. Let's
which will actually force you to take shots that are detrimental to you in the future.
yes,
Right?
yes.
So figure out what you actually need and then solve for that. And then after all that, take care of the next generation. So legacy planning, tax planning, estate planning, those are all things that if you don't plan for it, the government will dictate, Ottawa will dictate where your money goes.
Yes.
And you don't want to follow their roadmap for you.
You
Okay?
wouldn't want that.
Absolutely not. And not because of anything about the government. You can feel however you want to feel about them. I'm just talking about the way that it's laid out right now is not tax efficient for most. Okay? So if you just be a little bit thoughtful about who gets what and how they get it, you will save tens, hundreds, or millions of dollars for your family. Hands down for sure.
That's it. That's it. And if we look at the tax advantageous accounts, so we
Yeah.
got the first time home buyer savings account, the retirement savings plan, you got the tax-free savings account. Which one would you recommend maxing out first? So someone that hasn't put a dime into those.
Such a good question. Okay, if you have kids, I'm just gonna check that box. RESP is a really good tool if you think they're gonna go to school. Okay,
Yes.
for a lot of different reasons, and we can get into that if we have time and you want to. But let's put the kids aside for a second. If you're a high income earner, RRSPs are actually a really good use. Okay, if you don't own a home yet, your FHSA first and then RSPs. If you're somebody who's earning less than $150,000, your TFSA is your best bet to start. All registered accounts are a great idea though, because you can undo it right in the end and just benefit from the tax-free growth or tax-deferred growth. Okay. Now, an interesting fact is that an RSP and a TFSA function exactly the same. Okay. We think they both give you tax-free growth at the end. Okay. Their benefits are exactly the same, assuming your tax bracket when you're putting the money in and your tax bracket when you're taking the money out are the same. They both offer tax-free growth. And we've done all of the studies and calculations to show
Okay.
it, okay? Dollar in, dollar out, they're one for one the same. It's just about when you want the advantage. Do you want the advantage today or do you want the advantage at the end?
That's it, eh?
That's it.
That's it,
Okay?
exactly. Like
So
if you have a bet that you're convicted on, you know it's going up, you're very confident. I guess in that case, you would prioritize a TFSA. I know this investment will perform well. I want this one.
in fact, if you put it in a TFSA or an RSP, it will produce the same after-tax outcome if when you put the money in, you're in a 30% tax bracket, and when you took the money out, you were in a 30% tax bracket.
Okay.
They both give you the exact same outcome.
But the profit is later on when you withdraw it in the RSP, I guess. Or?
So here's the beauty, okay? You want to do this?
Yeah,
Okay,
go
all right.
ahead. I'm learning here.
$1,000. Okay, let's say you got $1,000. You got options. Okay, you can get paid the 1,000, and let's say you're in a 30% tax bracket, so you're gonna pay $300 to taxes. Okay.
Okay.
So now we're gonna skip all the extra calculations. Let's just use this example. Okay.
Sure.
So $1,000, 30% to taxes, you're left with $700. Okay. 700 goes into the TFSA. The TFSA is gonna grow year over year over year, tax free, and then you're gonna pull the money out at the end. Okay. Tax free. Let's use the same $1,000 example. This $1,000 example, there's no $300 tax because you get a deduction for
Yes.
your RSP contribution. The value of that 1,000 compounding over the same amount of years and paying 30% tax when you pull it out at the end produces the same outcome in the
Okay.
TFSA and the RSP. There is no difference.
I got it.
Okay?
Yeah.
The only time you're penalized in an RSP is if you're in a higher tax bracket when you retire.
It all depends what the definition of at the end is. I think that's what it is.
Very good.
Because if I have a bet that I think in 5 years it outperforms the market, and in 5 years I'm ready to liquidate, I wouldn't put it in an RSP because then I would lose that room if I withdraw it.
Very
but
good.
With the TFSA, you're able to, and you would regain that after the next calendar year. That's
Yeah.
more so what I meant. But
Yes.
if you have the long-term view, I totally understand that calculation.
You
there.
got it. You got it. And I
Okay.
hear what you're saying. If you're buying, you're convicted on something, but it's a play that you're going to want to get out of.
Yeah.
Yeah. When I'm talking about
That's it.
longevity.
Yeah, there we go. There we go. Amazing. Let's move on to real estate
Yeah.
opportunities. I wanted to ask you what you think about the latest market trends just in the real estate. I don't know how well versed you are.
Tell me.
Are you a real estate investor yourself?
I am.
or-
I am. Yeah. My wife and I, we have 5 commercial properties. Okay.
Yeah. That's nice.
Yeah. It's we chose the commercial route for a lot of different reasons that we can get into if you like. But
Yes.
yeah. What are the trends that you want to talk about? What?
Well, I want to talk about your opinion on where the market may be headed, if you're able to put a finger on that.
Yeah.
And also, how the interest rates could be impacting the market
Yeah.
at the moment. A lowering was pretty nice, I think,
Yeah.
needed, and hopefully we're going to see a few more in the future.
Yeah. Well, they say the market's priced in another 50 beeps over the next couple months. So we're
Yes.
expecting 2 more, 25 basis points cuts. We'll see. Okay. So, okay, we've been in a really unique position in Canada over the last, 20 years. If you've invested in real estate, you've done exceptionally well. Okay. And what I understand is that that's not been indicative around the world. There are pockets, of course. Okay. Of course, there are pockets that have had exceptional growth in real estate, but the vast majority of the world, there isn't a ton of growth in real estate as a growth asset. Okay.
Yeah.
It's a hedge. It's an inflation hedge. It's a real asset that's supposed to be maybe more defensive. Okay.
It's tangible, it's solid, it's there. I can feel
got
it,
it.
I can touch it, I can live in it.
You got it. And so we've enjoyed speculative type growth here, okay,
Yes.
where we're getting, high single digits, some low double digit returns year over year at times in real estate. And so that in my world would be a speculative growth, okay? So do I have confidence in that type of growth over the next decade versus the last decade? I don't think so. But that's okay because that starts to make sense to me for what real estate is for me, right? So it's a diversifier for my portfolio. I have real estate. I love real estate and I want it and it makes me feel good and I go visit it and I drive by it. And
That's it.
And it's all.
Hey, that's mine.
That's it. That's what it is. So that is part of the value. Okay. The other value is inflation. We talked about that earlier. Inflation goes up, real estate goes up. You get that natural hedge. Okay.
That's it.
But if you want to talk about real estate as an investment, it should be about return. Okay. Total return, and that's going to include your rental income. Okay. Now, I've got lots of clients who say, are you an investor, a real estate investor? Yes, I have X properties. And my next question is, are they cash flow positive? And often, yeah, about. Is that, well, did you factor in the property tax? No, if I factor in the property tax, I'm underwater
It
five
is
grand a
rarely,
year,
it
right?
is rarely cash flow positive today.
That's right.
Yeah.
So if it's not cash flow positive today, what's going to create the outcome, the growth that you expect?
That's it.
It's only appreciation,
You're going to
right?
have to bet on the appreciation.
Well, that's speculative to me.
Yes.
Okay.
And
And
it's speculative and not the least also unfortunate, I would say. Because there's a lot of young people that want to get into the real estate market,
Yeah.
but it seems like it's kind of going away at a faster pace that young people can kind of catch up to it.
Yeah.
And I feel like it's demoralizing a
Yeah.
little bit there. You
Yeah.
know, there should be more houses being built. There
Yeah.
should be more buildings being uprisen. We have
Yes.
the demand for it. Clearly, the demand is there.
yes. Now, without getting into solving the real estate conundrum of supply and demand, okay, there are ample studies that say renters come out just as well in the end as
Yes.
as property owners. Okay, so for anybody that's thinking about real estate, I can't get in. If you want in, do whatever it takes to get in, okay? But if you're like, you think I need to get in, but you're not sure that you even want to be a property owner, or you want to be a digital nomad, live around the world, don't even worry about it. You're going to do just fine investing in the market.
That's it. And you just put your finger on it. You can live around the world if you rent.
Absolutely.
When you're buying a property, you're remaining there. You're putting your foot down. You're saying, I want to live there, unless you're able to afford many in different spots. And that doesn't apply to many people today. But renting, you're not stuck
Yeah.
to a place. So that's amazing.
Yeah.
That's freedom.
Ashley and I went to Mexico for 3 months. Okay, now it was the best thing ever. We loved it, and we're doing it more often, going around the world to
Because you're
live.
able to work from
Absolutely.
home, give your services online.
But it hurts to have home base in Waterloo, paying that mortgage and living somewhere else. You know what I mean?
Yeah.
So, but that's par for the course for what we want, right? But I got 3 kids, right? So we need home base.
Yes.
But if I had it any other way, I'd be everywhere. I have a few clients I idolize. They just Greece, Portugal,
That's it.
Spain. They're like everywhere. It's like, wow.
I think that's my ultimate goal here. I need
Yeah.
to work hard in the young years and the early years, but I think that's going to be the goal to not be sedentary. I
Yeah.
don't know if that's an English term there.
Yeah,
but,
sedentary for
yeah,
sure, just
yeah.
stationary.
That's
Yeah.
it, exactly. Okay, so we talked about real estate. I wanted to get into the crypto world a little bit. I would like your view on that. Okay, let's talk about just one specific asset. Let's talk a bit about Bitcoin first, and then we can expand upon, the crypto world itself.
Sure.
What are your thoughts about Bitcoin?
Yeah, look, I'm a holder, right? So I'm there, but you got to know for yourself, and this is more your domain. But I'll give you my from my view here. So Bitcoin's here to stay. I think we're all in agreement there. Maybe we're not in agreement, but you and I are definitely in agreement for that, that side of things. But you got to be okay with volatility. You got to be okay with this thing's going, like, you're going for a ride here, okay? And if you can handle it, if you can stomach it, put whatever portion is comfortable for you. And for our clients, we don't like holding any more than 5% of any asset as part of a portfolio, okay? So that's just kind of long view. You don't want to, that kind of great exposure to any one asset, okay? But however much you want to do, that's up to your comfort level. So it's here to stay, but there's conflicting views, right? So if you're talking to institutional investors, you're talking about kind of long view. A lot of them will say the financial world, the way that it's structured right now, won't allow for these kinds of currencies to integrate into our system for a variety of reasons that are against their desired outcome, right?
Exactly.
So you're gonna have to fight against that.
Yeah,
okay?
because they're going to be losing a grip, right? Losing a grip on power and a grip on a money printer, essentially.
Absolutely.
I mean, for now, it's deemed as a commodity here in Canada and not a currency. So it's a 50% capital gains rate, and your basic commodity as if it's gold. But if ever it does start to compete with the dollar and everything like that, and it becomes a medium of exchange, it can be it can frighten government for sure.
Well, the big thing on that topic, so we were at a dinner with one of our institutional PMs for an insurance company, and he runs the fixed income portfolio. And we asked his opinion. How do you feel about it? Because we want to know kind of what to say to our clients as well, right?
Yeah.
And he said the biggest risk for these institutions, these governments, is that mobility. Okay, so in the past, when you needed to move, you would have to carry gold, cash, not cash, but gold assets, whatever it was.
Yeah,
You can
your
only you can
paintings.
only carry so much.
Yeah, for
Okay,
sure.
you can only move so much. Everything else had to flow through the system, so to speak. Okay,
Yes,
but Bitcoin,
that's very mobile.
you move $100 million in your pocket,
Yeah.
like just walk
You can go
across.
over a border whenever and you won't get stopped. You'll get stopped if you have over $10,000 in your
That's
bag.
right. So that's the thing that could shake the world up.
Yes.
Okay.
And I mean, I feel like I've been watching a lot of documentaries on it, and it's been shaking the world up, but a lot in the Oriental areas or a lot in Africa. There's a lot of adoption over there because, I mean, their currencies are kind of inflated away and they
Yeah.
don't have purchasing power and they don't trust that the government apparatus would, help them get a stronger currency. And it's kind of a bottoms up technology
Yeah.
that we're seeing
Yeah. The
actually.
people.
That's it, exactly.
Yeah.
It's kind of a peaceful revolution.
Yeah.
That's how I would describe it.
Yeah. Bravo. Well said.
Yeah, yeah. So I really like that freedom personally. I think it's a great technology that we have, and I can't wait to see what change that will have on the world. I think it's probably as significant as when we discovered fire or discovered the wheel or discovered something like the boats and just it's a very meaningful technology in my opinion that's going to be used in various different ways. For example, I guess insurance costs could
Yeah.
lower quite a lot if you have an investment that returns 20-30%. It's been 50% in the last few years. Like, why would you need to charge all that much if you have such a good asset that outperforms? There is the volatility argument, but the volatility, that's what I would say to the viewers out there, that's the opportunity.
Yeah.
Because that makes a lot of people fear that asset, and that's okay. Don't fear volatility yourself. You have so many years ahead of you. You don't need to fear volatility. If you're on a ship in the middle of the ocean and you're rocking and there's waves and everything. Oh, I don't like the volatility. I don't like the volatility. What's your alternative? Jump
Yeah.
in the ocean?
Yeah.
Jump
Yeah.
into a currency that's being actively devalued, or jump into the world of stocks that it's hard to place a bet on the right stock, so you have to diversify on 500 stocks that you also don't know all the 500 stocks you're invested
Absolutely.
in, or hold on to the boat
Yeah.
and put the sails up and get to shore.
Mm-hmm.
What are you gonna pick? So that's how I see it myself. But there's not all that many people that are all that deep in it. But I see it being very impactful.
I think it's a good thing for people to have some exposure to, for sure. You don't want to miss that.
Yes.
Just given the systems the way they are today, and I mean some will dive all in, right? And you've seen lots of companies they hold Bitcoin in treasury, okay, and they've been buying up significantly. I think I just watched a video a few days ago that showed maybe a 100x change from a few companies were holding $1 million in treasury. Now it's like 100 million, right?
Yes.
So it's growing significantly, but yeah, have some exposure.
That's
Don't,
it.
Don't miss out on it. And I think what you said was really nice about fire and the wheel. Yeah,
Yes.
it is that profound of
Yes,
a discovery.
it is.
We're not, yeah.
It really is. It's something that no one can inflate.
Yeah.
Even gold, you can tamper with it. You can make money notes, or you can have it in a bank vault. But is it actually in the bank vault? I
Yeah.
don't have the proof.
No,
Sorry.
no.
I do have the proof on the public ledger blockchain online that I do own my own Bitcoin and I can own it myself. So it's just very freeing.
So-
it gives a lot of hope to humanity.
There's one thing I have to say on it, and that is there's also room for exploitation. Okay. Now, aside from, I'm not talking about risk of theft and things like that. What I mean is leverage strategies and doubling down and tripling down and these 2x Bitcoin ETF and
Yes.
so on. This is the worst thing for the industry, so to speak, or the crypto world. It's like when people start to like double and triple down, you look like it's like cowboys out there. We're not going to get the right adoption when we exploit like that. Okay, and I use the word exploit purposely, right? It's like it just feels irresponsible.
Yeah,
So
most definitely. We've seen many exchanges, being over leveraged
yeah,
and collapsing and needing to close doors and not even being able to pay out to the people that invested on their platform and held on their platform.
that's right.
So that's why it adds a degree of security to hold, in self custody because
Yes.
you're not tied to any exchange like that and you don't need to trust a third party. But you must be very well organized
Yes.
because if ever you lose your keys, which is where you're keeping your bitcoins, essentially,
It's gone.
it's gone.
Yeah.
You're losing it forever. I mean, that's positive for the network, like a net benefit, in my opinion, because if it's gone forever, that means it won't ever be used. It won't ever be sold. So that's
Hold
it makes it even more
infinite
scarce.
holder.
Yeah,
Yeah.
even more scarce. And there's many infinite holders that have lost their wallets. So it's a very interesting
Wow.
dynamic.
Yeah.
Very, very interesting. Okay, so I wanted to expand upon a bit more into the crypto world and the ecosystem, but we're at 50 minutes here. So I got two signature questions from the podcast, and maybe we'll touch on crypto if ever we have time. Um, I wanted to ask you, what would be the advice that you'd give to your younger self with all the knowledge you have today?
Wow. Yeah. It gave me goosebumps when you said it. I would say, yeah, get bigger goals. Think bigger. And that might feel a little cliche, but I'm going to give you a little background on it. I told you I had that entrepreneurial spirit, and I thought big. Okay, like you got to get that. I thought big, and my goals were bigger than what I could ever have seen around me. But I was really influenced by my surroundings. So when you're looking at like $1, and you're like, I wish I had 10. That's 10x, right? But if you had 10, your 10x is 100, and so on and so forth. So you got to like remove the ceiling, okay? And it just happened again for me. Like every time I think I've got these big enough goals, I meet somebody, I talk to another entrepreneur, I'm like, I'm not even close.
Yeah.
Like you actually have to set your sights on Elon Musk and Jeff Bezos and those. You got to
Yeah.
actually look up and say, that is a goal worth, that's a game worth playing, okay?
Most definitely.
And if it's not about money, that's okay too, okay? Like have something worthy of your life, okay?
Yes.
And whatever you think it is, it's not big enough. Like that's the real advice.
I
It's not
absolutely
big
love that message. Yeah, that's very like what you need essentially is meaning. I
Yeah,
think
yeah.
that's what you need. You need meaning, and I feel like a lot of people might be a bit meaningless right now and thinking that there's no future or something. But if you set your sights onto something that seems unattainable, there's a reason that there's an Elon Musk in the world. There's a reason that there's a Jeff Bezos in the world. It's because it's attainable.
Yeah.
So
They've
you're
done it.
able to attain it yourself. Like they didn't just be born just like that. No,
That's
they
right.
capitalized on the idea specifically that they thought would help them reach their goal, and they dabble in many things. Right now they're playing with the space exploration,
Yep.
and they're playing. Elon just buying Twitter out of nowhere.
Right.
They're able to then expand their horizons. But at first, you need to have your sole focus. Like, what is that? That's PayPal for him.
Yeah.
What is that for Jeff Bezos? That's actually giving a worldwide marketplace on a digital storefront.
Yeah.
And what is that for Mark Zuckerberg? Helping people connect, but on a digital world. But right now, he's actually making goggles, meta goggles
Yep.
that permit you to go in a VR world. I'm sure you didn't see that before. His horizons are opening up, and
Yes.
it's probably bigger than what he thought he could attain
Yes.
when he was starting Facebook at a college. But
I will-
everything is attainable.
I will say on that topic, it's like, have you ever read the book 0 to 1?
No, I haven't.
Peter Thiel, okay? So he's at Palantir now, right?
Yeah.
And he was part of the guys that did the PayPal thing with Musk. So he has a book called 0 to 1. Everybody should read it or listen to it, okay? And so, the greatest kind of wealth that gets created are in these concepts that didn't exist and come into existence, okay? But it doesn't have to be that. I need everybody to know that. Like my business didn't do a 0 to 1. We aggregate existing ideas and make them better.
Yes.
We put them together in a different way.
You bring your touch to it.
Yeah, and we've created exceptional wealth, and we'll continue to do so like that, okay? So it doesn't have to be I create something from nothing. You can improve a system and do really well for the world in that way as well.
That's it. That's
Yeah.
it. That's what I'm trying to attain with the Asset Ambitions group, I called it. It's
Yes.
been 2 months and a half that I'm on my own now as a realtor, and this is going to be a real estate team. And I'm trying to specify on digital technology, like really have pretty much everything digital rather than physical feature sheets. It's going to be a QR code. It's going to be actually you come in the house, you scan, you have all the information right there. Anyone
Nice.
on their phone can use that. Or the podcast to provide value to the viewers. Or on the website, I have some resources for every buyer or seller. You go on one of the page, and I have a multitude of different contacts for mortgage brokers, insurance specialists, people, home stagers for sellers, people that can come, electricians or HVAC specialists. And that's just a resource that I'll send to every single client that comes in. So it's just hopping on the digital wave and bringing my ideas to the marketplace there.
It's great.
Hopefully they get recognized.
Yeah.
They're being recognized, so we'll keep her going. Okay, so to wrap it up, this is the signature of the question of the podcast. What is your most prized asset?
Can I say my kids? Is that okay?
Yeah, for sure, for sure.
In the world of
You're not the
asset-
first.
Yeah?
You're not the first. Yeah, yeah.
Richard Branson said it. He said, if you want to, he was asked by somebody, and he said, if you want to judge me, they talked about how do you want to be judged, like for your legacy? How do you want us to remember? He said, judge my results by my children.
Yes.
That
It's
is
a direct
who I am.
reflection of who you are.
That's exactly it, man.
Yeah.
That's exactly it. Okay. So, and I heard that and said, whoa, that's a thing, right? So, because who we leave behind us in the world, right? Like my greatest contribution to the world will be the daughters that I bring up. I have 3 kids, and Ellie is my eldest. And man, she's standing on the corner. She's got a setup. She made these bracelets, and she's selling bracelets in
There
the
we
world
go.
and and then she's going to reinvest her in art and supplies and create them. Like we just created an entrepreneur.
You must cherish that.
Yes.
You must cherish that. I always circle back to this, but kids must be the most meaningful thing that you can have. I was just talking about meaning. I think that's one way to get meaning to your life is having a small human being that you brought to life, that you're upbringing them,
Yeah.
and you're passing on the good things and the bad things from yourself.
Yeah,
You're
watch out.
and it reflects on you, and you can self-reflect and say, like, I don't want to pass that on. I need to put an X on that thing and actually cherish them more in this way. So it's just amazing the change that having kids must have.
Yeah.
I can't wait to have some.
Yeah.
Yeah.
Good.
I'm sorry we got to cut it short here. But very exciting episode. Thank you very much for coming on, Al. So thanks for watching the 17th episode of the Asset Ambitions podcast. This was amazing. Write in the comments whatever that you might have got from this episode, some strategies that might be of use. And don't hesitate, if you have any questions, you can reach out. And I'll be putting on the website of the Longevity Achieved in the description as well for you guys if you want to check out their services and connect with Al or any of their employees over there. So thank you for watching, and thanks for coming on, Al.
Thanks for having me.